With new CEO Jim Farley taking over, Ford appears to be steering in the right direction. Jim Farley has vowed to work with urgency, prioritizing cost reductions, focusing on the production of the best-selling models, and investing heavily in electric vehicle production to meet long-term regulatory requirements. These developments have created a substantial potential upside for the Ford stock. Before we get to the video, please share your thoughts in the comments and use the thumbs feature. It would help YouTube suggest the correct videos to you and helps the channel to understand our audience. Feel free to subscribe to always get our latest videos. The company. Ford is an established player in the automobile industry and dominates the pickup truck segment in the lucrative USA market. Ford's F-Series trucks have been the best-selling vehicle in the US for 39 straight years, and there doesn't look like anything will shake its dominance. Ford's strong brand value ensures continued sales in this segment for the foreseeable future. Ford has decided to focus on the SUV segment as Escape and Explorer SUVs have done extremely well, resulting in strong sales numbers. This new focus on the SUV segment has led to further optimizations, and Ford has decided to phase out Focus, Fiesta, Fusion, and Taurus lines of sedans. The Mustang is the only non-truck or SUV vehicle to remain on sale in the US. However, the company is planning to introduce an SUV version of the Mustang by 2021. Change in leadership. Jim Farley became CEO in late 2020, replacing Jim Hackett, which comes as a change at a pivotal time for the company. Currently, Ford is viewed to be behind GM for its plans for autonomous and EV vehicles. With Farley's appointment, the company is planning to transform its operations and accelerate its plans for autonomous and electric vehicles. The new CEO also plans to improve quality, reduce costs, and restructure underperforming businesses. Farley also promised to speed up the automaker's transformation efforts and bring a new sense of interest in the company from investors. Farley's top priorities are to have a smooth transition in leadership, accelerating North American operations to achieve 10% profit margin, and accelerate growth businesses such as connectivity and EV to better compete against Tesla. Ford's foray into EV. A few years ago, the idea of the world moving to electric cars seemed like a fad. Today, electrification is a certainty rather than a mere possibility. The global EV market is projected to grow 16% annually by 2025. EVs currently make up about 3% of the auto market but would reach about 14% of the market by the end of the decade. Government mandates increase driving range and cost parity between EVs and existing vehicles could accelerate demand further. Mainstream, mass-producing automakers are scrambling to catch up with the established EV players. Ford, for its part, has already made massive investments and is pushing strongly towards the EV market over the next few years. Ford plans to spend more than $20 billion on electrification through 2025, and initiatives are well underway. Ford is also moving most of its lineup to EV, starting with its areas of strength. A good example of this is the Mustang Mach-E, which is a brand new car with a futuristic body and no gasoline option. The company also has the financial firepower to execute this strategy, which is not something you can say about every EV-focused maker. For this reason, Ford is a serious contender despite its checkered history in recent years. Ford goes all EV in Europe. Ford has reaffirmed its commitment towards EV by taking significant steps in Europe to go all EV for its passenger vehicles by 2030. The company expects to have all its passenger vehicles be zero-emission capable, electric or hybrid by mid-2026 and all-electric by 2030. This will primarily be done through a $1 billion investment to modernize its assembly facility in Cologne, Germany, which will transfer existing vehicle assembly operations into Ford Cologne Electrification Center. The facility will start producing all-electric passenger vehicles by 2023. Ford Robotaxi Service. Ford has invested over $1 billion in machine learning company Argo AI to design the software to enable full self-driving. Ford is expected to focus on building out the hardware platform and the physical car, while Argo AI will focus on the software side. Ford's plan of full self-driving have been delayed to 2022, missing its initial estimate of 2021, with the company expecting full self-driving limited to urban environments and ride-hailing robo-taxi services. Current and former lineup. In 2020, the company launched 3 new vehicles, including the all-electric Mustang Mach-E, the new F-150, and the Bronco Sport. The Mustang Mach-E has adopted rear drive and targets 300 miles of driving range, which competes head-to-head with the Model Y from Tesla. Ford is causing its efforts largely on trucks and SUVs and slowly phasing out its sedan lineup. The company has phased out its Focus, Fiesta, Fusion, and Taurus line of sedans. The company is also expected to begin production on the iconic Bronco line, which is expected to begin deliveries in the second half of 2021. Finally, the company is expected to launch its third-generation F-150 Raptor, which is expected to arrive with significant technological additions. Strategic partnership with Google. Ford has recently partnered up with Google to accelerate its transformation and reinvent the connected vehicle experience. Ford plans to leverage Google's world-class data, artificial intelligence, and machine learning to modernize operations, accelerate digital transformation, and enhance its customer experience. As part of this new collaboration starting from 2023, all future Ford and Lincoln vehicles will be powered by Android with Google Apps and services built in. Further, Ford and Google will establish a new collaborative group called Team Upshift. Leveraging the talents and assets of both companies, Team Upshift will push the boundaries of Ford's digital transformation, unlock personalized consumer experience, and drive disruptive data-driven opportunities. This will include projects ranging from developing new retail experiences when buying a vehicle to creating new ownership based on data and more. Financials. Ford's revenues were down 15% in 2020 due to the COVID-19 pandemic, but are expected to rise by 25%, and earnings are expected to jump 180% in 2021 based on consensus estimates. However, this boost is a temporary effect of the opening of the economy after the lockdown. Growth is expected to normalize post-2021 with 6% revenue growth in 2022 and 30% growth in the bottom line. This growth rate should help in above-average gains over the next few years for the stock. Valuation. Where many companies are trading with lofty valuations, Ford's valuation is relatively cheap and attractive. Ford is trading at a forward PE ratio of 10.9. The company's PEG, price earnings to growth ratio, is 0.34, and its PS, price to sales ratio, is only 0.38. It's rare to see a company that is as profitable as Ford to trade at PE ratios near 10 and PEG and PS ratios below 1. At current levels, Ford's stock has plenty of room to run higher, with strong growth being identified as the main catalyst. Valuation risks. As with all automakers, Ford has also been impacted by the global semiconductor shortage. Many production lines have been shut down temporarily because there just aren't any chips available, which is an unprecedented event. Ford also faces the loss of SK Innovation, who are the battery suppliers for the company's EV. SK Innovation was recently banned from the US for 10 years following a loss against LG Chem based on an intellectual property dispute. Ford will still have access to SK Innovation's batteries in the transition period, but will need to find a domestic supplier. Conclusion. Ford streamlined its production, phased out non-performing models in its lineup, and heavily invested in electric vehicles. Ford has the cash flow from its F-Series models, which can support growth investments in its EV segments. Analysts have continued to increase earnings estimates as it has become clearer than ever that Ford is here to win in EV. Ford's attractive low valuation leaves plenty of room for the stock to appreciate at a strong pace. The sales recovery over the next couple of years following a rough 2020 selling season can help drive growth and act as a catalyst for the stock. A strong, sustained upgrade cycle is expected with Ford's earnings, which will help valuations rise, making the stock very attractive. An innovative company with a strong history showing a willingness to innovate trading at 10 times forward earnings seems quite reasonable. When it comes to the million-dollar question, is Ford stock a buy? According to 9 Wall Street analysts, 7 recommend a strong buy, the other 2 suggest to hold. None recommends a sell of a strong sell. The price forecast found on CNN Business goes over 17 analysts offering a 12-month price forecast. According to their ratings, the stock remains at a hold. What are your thoughts on Ford? Do you think they will benefit from the leadership change? Would you invest in their stock? Let us know in the comments down below. If you made it all the way until here, thank you so much for watching. Don't forget to subscribe. It's free and reversible anytime. Hope to see you in the next one.